Welcome back to Investing Talk Podcast. Today, we are cracking open a company that really sits at the intersection of risk and reward, especially in that critical mineral space,
Right.
American Battery Technology Company.
Yeah, it's a fascinating one. You've got this huge potential backed by the government trying to solve a major supply chain issue.
Exactly. But they're also spending money very quickly. So the essential question we want to try and answer for you today is pretty simple. Is now a good time to buy this stock?
Hmm.
To figure that out, we're going to be digging into the financial data, looking at the competitive landscape, considering the geopolitics, and analyzing the technicals, the momentum.
Trying to piece it all together.
Right. Our mission is to give you a complete synthesized picture of this whole investment story. And before we jump into all the details, please just take a second to hit subscribe, like this discussion if you find it useful, and leave us a comment below.
Yeah, we'd love to hear from you.
And definitely, if there's a specific company you want us to analyze next, just drop that name in the comment section. All right, so let's unpack the central tension here. When you look at American Battery Technology Company, the first thing that jumps out is volatility, really defined by two explosive numbers.
Right.
On one side, you've got the revenue figure from their recent fiscal year 2025 report. They reported $4.29 million.
Okay.
Now, that translates into a dramatic 11,149% year-over-year increase from 2024.
Wow. Yeah, over 1,100%. That's huge growth.
It is, and this growth comes from scaling up operations, specifically, accelerated battery recycling and some early-stage lithium production. That four-figure percentage, that's the bullish headline-grabbing number.
It certainly is exhilarating.
Yeah.
But, you absolutely cannot look at that 1,149% growth without immediately thinking about profitability, or the lack of it, maybe.
Right.
Despite that huge revenue surge, the company reported a net loss for fiscal year 2025 of $46.76 million.
Oof. Nearly $47 million cash burn. I mean, for a lot of investors, that right there is a potential deal breaker. How do you square that kind of loss with the idea that this is a healthy growth stock?
Well, what's fascinating here, I think, is how you frame that loss. You could think of this $46 million, maybe not as a failure, but more like a required tuition fee,
Right.
like the cost of entry into a really high-stakes national security level industry.
Okay, an expensive entry fee.
Very.
Yeah.
They are spending heavily, yes, but it's to build infrastructure and scale up fast. The key nuance, though, is in the trajectory. That net loss actually narrowed by 10.9% from the prior year.
Ah, okay. So it's still a big loss, but it's moving in the right direction, slightly.
Exactly. It's a modest improvement, sure, but it reflects some operational efficiencies kicking in. It shows that operating leverage might be starting to become evident.
Which basically means it's costing them a bit less to process each additional unit, right?
Precisely. The cost of processing the next ton of battery scrap is actually getting cheaper than the last ton. So the current losses, you could argue, signal necessary, aggressive reinvestment that should accelerate earnings improvements in the coming quarters.
Okay, that reframes the loss somewhat. But rapid expansion like this still needs just colossal amounts of capital. So the question then is, can we trust their own balance sheet to sustain this burn rate, especially with all the volatility in this sector?
That's the critical question.
Looking at their latest filing, their cash holdings were $12.47 million. Okay, that supports immediate liquidity, covers short-term stuff. But compared to that almost $47 million annual burn rate, well, it doesn't seem like a huge safety net.
Exactly right. And this is where the story really pivots. It moves away from just traditional company finance and more towards geopolitical strategy.
Okay.
The true financial bedrock for American Battery Technology Company probably isn't just their cash on hand, it's the massive strategic federal support they're getting.
Ah, the grants.
Yes. They secured a $144 million government grant, specifically for a new lithium facility. That's significant.
Okay, $144 million.
But the backing for their flagship project, the Tonopah Flats Lithium Project in Nevada, is frankly staggering. That single project has a $58 million Department of Energy grant, plus a massive $900 million Export-Import Bank letter of interest. That's for financing the construction.
Whoa. Okay, let's pause on that $900 million figure. A letter of interest. That's not the same as cash in the bank, right?
Yeah.
It's a big difference. Doesn't that mean there's still quite a bit of financing risk here? If that deal, I don't know, falls through, could leave them short for construction.
That's a crucial distinction. You're right. It is not committed cash yet, but it is a commitment to finance the construction. And what that does is drastically de-risk the project's capital needs. It's a massive vote of confidence from the federal government.
So the government is essentially signaling this project is vital national infrastructure and we intend to backstop its funding.
That's the message, yes. It's the assurance of capital that matters most right now for them.
Okay.
And the market seems to have validated this assurance. If you connect this to the bigger picture, their inclusion in the Russell 2000 and Russell 3000 indexes back in June 2025, that further solidified their growth path in the eyes of the market.
Right, the index inclusion effect.
Exactly. For you listening, index inclusion means forced buying. Funds that track the Russell 2000 suddenly had to buy millions of dollars worth of American battery technology company stock, pretty much regardless of the price, just to match their index weightings.
Pure technical upward pressure.
Pure technical pressure, confirming the company's kind of graduated beyond just being a small speculative play.
Okay, that sets things up nicely. So if the money and the political backing seem, well, pretty solid for now, what about the competitive edge? What stops rivals from just jumping in and challenging their position, especially with all this government focus?
Good question. Their unique selling proposition seems to revolve around a dual strategy and also their first mover status in certain areas.
How so?
Well, in recycling, they boast the largest lithium-ion battery recycling facility in Nevada. But the key is how they do it. They use environmentally friendly, non-smelting processes.
Okay, non-smelting, what's the benefit there?
It recovers vital battery metals more efficiently and, importantly, uses less energy than traditional methods. That's a crucial green advantage that really appeals to, say, automotive OEMs who are very conscious of their supply chain footprint.
Makes sense. And does that green tech translate into actual business?
It seems to. It helps secure their revenue pipeline. It's not just about the tech itself. It's about their customer reach. They have key B2B partnerships, like the one with Call2Recycle.
Ah, Call2Recycle, yeah, they handle a lot of consumer battery collections.
Exactly. That partnership gives them access to established collection networks at scale. It helps lock in strategic scrap material commitments, providing, tangible revenue visibility down the line.
Plus, they seem to have regulatory tailwinds that maybe others don't. You mentioned the U.S. Fast 41 initiative. That's accelerating federal permitting on their big Tonopah Flats lithium project.
Right. That's basically a government mandate to fast-track critical infrastructure projects. And it essentially creates a kind of temporal moat for them.
A temporal moat, meaning a time-based advantage.
Yeah, precisely. As you rightly point out, it means they get a government-backed speed advantage over competitors in navigating the complex, often slow, regulatory approvals. As the whole global supply chain is being pressured to shift away from foreign dependencies, particularly China, this company is being actively prioritized as a domestic, secure solution.
And all this regulatory and financial momentum, presumably that translated directly into the stock price action over the summer. It was pretty sharp, wasn't it?
Oh, it absolutely did. If we look at the technical data, the stock dramatically outperformed. It more than doubled in just the past quarter. Moved from around, $1.35 per share back in July 2025?
Yeah, somewhere around there.
To trading firmly above $3 per share in October. And this movement isn't random. You can almost track it against the news flow about those grant announcements and the project milestones.
So the big question is, can that momentum continue? What are analysts thinking?
Well, current analyst modeling projects an average target range somewhere between $7.27 and $9.59 for November and December 2025.
Wow, okay, that implies significant short-term upside still expected.
It does. And the 12-month median price target is set firmly at $6.12. So still quite a bit higher than where it is now.
That's a huge vote of confidence from the analyst community. Suggests they really believe this federal backing is transformative for the company's valuation.
And the technical indicators seem to confirm this strong sentiment. The stock is trading firmly above both its 50-day and 200-day moving averages.
Which is that classic confirmation of a sustained bullish trend, technically speaking.
Correct. Plus, we're seeing unusually high options trading volume. That often reflects growing institutional interest, traders positioning for these potential upsides, maybe ahead of scheduled events or news.
Okay, so if the money looks relatively secure for now and the technicals look strong, what are the next, say, 3 key events or milestones that you, the listener, need to watch? Things that could confirm or maybe deny this bullish case over the next few months? Let's look at near-term catalysts.
Right, the things to watch.
First and most immediate is the upcoming Q1 fiscal year 2026 earnings release. That's expected sometime in November 2025.
Crucial report.
Absolutely. This report really needs to show continued revenue acceleration. It needs to reinforce that fundamental growth story and prove that those operational efficiencies we talked about are actually scaling up as promised.
Agreed. What's next?
Second, keep a close eye on regulatory milestones. Specifically, any news on the environmental permitting progress for the Tonopah Flats lithium project. That's probably the single most significant near-term catalyst for actually starting major construction.
Yeah, that's the big one. If that news drops, signaling the final green light, you'd expect a very strong market reaction.
Definitely. And third,
don't forget the market mechanics we mentioned earlier, the Russell Index rebalancing in December.
oh yes, the index funds.
It's a scheduled index event that basically forces institutional funds to potentially buy more shares to align their portfolios with the updated index weightings. That's predictable, technical demand pressure.
Okay, so earnings, permits, index rebalancing. Anything else? What about speculation?
Well, beyond those scheduled or semi-scheduled events, there's always that kind of pervasive speculative buzz around companies like this. Rumors are definitely circulating about potential major OEM partnerships. Think huge multi-year contracts with major auto manufacturers looking to secure domestic battery materials.
That would be massive.
Game-changing. And also potential for further government grants or maybe even Defense Production Act funding, given the clear national priority on securing domestic critical mineral supply, if any of those rumors actually materialize into firm news.
Instant triggers for the stock price.
Absolutely high-impact triggers.
Okay. Now, for a company that seems positioned for such, well, potentially exponential growth, we absolutely must outline the critical risk factors, the things that could derail this whole momentum. This is the necessary flip side of that growth story.
Absolutely essential to cover the risks. And the primary one here, I would say, is execution risk.
Meaning actually building the things they say they're going to build.
Precisely. Building major refineries and lithium extraction facilities is incredibly complex, capital-intensive, and takes time. There's always potential for delays in a project like Tonopah Flats. Unexpected cost overruns happen, or maybe the scaling of that recycling revenue is just slower than forecast.
And any slip-ups on that project timeline?
Will immediately test investor patience and confidence in management. That's a big risk.
And even with the federal backing, that financial burn rate we discussed, that remains a concern until they actually reach commercial scale and profitability, right?
Correct. Those sustained net losses will continue to challenge the company until full commercialization of both the recycling and the mining side is achieved. The federal support mitigates the risk of, say, insolvency, but it doesn't eliminate the fundamental need for the business to eventually become profitable.
Makes sense. Any other major risks?
Finally, there's always market risk. The inherent volatility of lithium prices and related mineral input prices could put pressure on their future profit margins, even if they execute every part of their plan perfectly. If lithium prices crash, it impacts their economics.
Right. Commodity price risk. Okay, so bringing this all together, what does it mean for you, the potential investor? Our overall assessment of American Battery Technology Company, weighing the risks and rewards, actually leans pretty strongly bullish right now. We'd give it maybe an 8.5 out of 10 overall rating.
That's a strong rating.
It is. The rationale is really based on that validated execution we're starting to see, shown by the massive revenue acceleration, combined with truly unprecedented government backing, and then layered with those favorable technical and sentiment indicators that suggest continued upside is possible, especially perhaps in the short-term run-up to that Q1 earnings report.
So, if you're considering this investment, we kind of see two distinct pathways depending on your time frame, your investment horizon. The first is maybe the shorter-term pathway. The stock looks potentially attractive for trading, maybe ahead of that Q1 earnings report, and the anticipated construction or catalyst news over the next, say, 3 months. That approach relies heavily on momentum and news flow.
Turning the catalysts.
Essentially, yes.
Yeah.
The second path is the longer-term structural pathway. This is more of a bet on the fundamental restructuring of the entire U.S. critical mineral supply chain.
The bigger picture play.
Exactly. You're leveraging those massive regulatory tailwinds we talked about and the company's dual growth strategy, both battery recycling and new lithium mining. That makes it potentially a very compelling multi-year structural investment.
Okay, So to wrap up with one final, maybe provocative thought for you to consider, think beyond just the stock price for a moment. If American Battery Technology Company actually executes on these huge federally backed projects, especially Tonopah Flats, it doesn't just grow as a company. It becomes a crucial, maybe even indispensable part of the entire national strategy to shift the critical mineral supply chain, to actively de-risk the U.S. economy from foreign, particularly Chinese, lithium dependency.
That's a really key point.
This isn't just a stock story, it's potentially a critical geopolitical infrastructure story unfolding.
Indeed, it's a company with genuine national security significance attached to it now. And that level of backing really does change the risk calculus quite significantly. We'll definitely be tracking those catalysts closely.
Thanks for joining us for this in-depth look. We'll see you next time on Investing Talk Podcast.